Ron Paul has been forecasting the blow off of the everything bubble for a few years now. And now what's he saying? This is Brian Lewis with MMT Investing, and things just changed. So, as you guys know, I was a community organizer and a delegate in the presidential election for Ron Paul. So, I'm pretty well aware of what he's been talking about, and also just that the libertarians do a ton of monetary history and a ton of Austrian economics, looking at bubbles. Ron Paul is one of the big bubble people that loves to talk about the bubbles. I just wanted to zoom out here and take a look at our bubble and see what is going on with this bubble. So I guess I guess I'll start off by saying that I lost my house and all of my money in the housing crash, and that was the beginning of my interest in macroeconomics. So I've been studying macro for the last 10 years or 12 years or whatever, and just trying to figure out the financial system and investments and what is going on. It's very complicated. So I guess let's take a look at the trend lines that we have set up here. So basically on the way up in this bubble, oh wait, I was gonna talk about Ron Paul. Let me say that Ron Paul always smashes that like button right now, please, to help me out with the YouTube algorithm. So yeah, so I mean Ron Paul says that the fiat currency is a distortion of the real values of things, and that these bubbles are just a distortion of the real economy. And when the bubble does blow off, the Fed and the Treasury are helpless against the unwinding of the bubble. The bubble is in control. It's a contraction of the monetary system. And that's the general thing. And he's been saying that we can expect a 50% drop in the stock market or more is his estimate, and it's not a very precise like mathematical result. It's just a general idea of how a bubble unwinds. So just looking at the shape of the bubble and what we have going up here. So you can see here we have a sharp bull market off of Volmageddon, and we have a less sharp bull market here off the financial crisis. And then we have a very long and less sharp bull market that goes back to the Volcker bottom in 1982. And if we zoom in on our chart here, we can see all the cool stuff. Well, these bars are not that useful on the all-time view. They're massive. But we have our first dead cat bounce that hit the Volcker line. We have our second dead cat bounce at the financial crisis, and now our bigger dead cat bounce or bull trap off the Volcker line. So we're bouncing off of these bull market lines that go way back to the beginning of this bubble. And right now, basically what we're doing in this credit contraction cycle is to reverse all of these bull market trends. And it looks like we're setting up a longer term bear market once we break all the bull market trends. So here's a very important. Let me get into like the 6-month view here, because this Volcker trend line is super important to whether or not we are going to go into a long-term bear market. So, sorry, I have a mess still here from my last video. So right now we're looking at coming down right now we're switching away from this upper level tangent line. It looks like we reversed off that thing already today and with pre-market activity, and now we're we're trying to search for this line right now for the top of the zone. And then the pattern that we've had is to come down and break the trend line that we bounced off of and then back test it. So that's what we got here. We bounced off the trend line for a bull trap, and then we broke the trend line and back tested it. And we did it in a tiny scale here. We bounced off the trend line, broke it, back tested it. So that's what we're trying to do on this timeline is we bounced off the Volcker line, and now we're trying to break the Volcker line and back test it. And this is a critical spot to see what's going on with this crash. If we are in fact looking for a long-term bear market, then we're going to want to get underneath this Volcker line. This is a critical spot wherever that is, like 2170-ish on the S&P. If we get under this line and back test it, then that will set up a longer bull market here underneath the Volcker line that intersects at our tangent line here. Because you can see that each tangent line that we hit ends up becoming the middle point of the next bull trap. So that happened. That's happened 3 or 4 times already. So we have the middle, the tangent line off of this tiny one is the middle of our dead cat, and then the tangent line off the dead cat is the middle of our bull trap here. And then that's what you would expect to see again if this pattern continues, is to see the tangent line off the bull trap be the center line of the next bull trap, and we would stay underneath, and we'd get up to the corner of a higher level tangent line, and we'd be bounded by the Volcker and the tangent line here. That would start a longer bear market. So that's the idea and the patterns that we're seeing kind of in the unwinding of the everything bubble, and Ron Paul's projection that the stock market will lose, well, let's look at the numbers. We'll lose 50% or more. I mean, he didn't say if the stock market will lose 50% like right now. You know, like in a 3-month like blow off top. I think he's talking about 50% over the long unwinding of the bubble down to the bottom. This chart is not useful whatsoever. All of these lines are just completely destroyed. So this is our long-term bull market lines, where each crash kind of pulls down beneath the bull market line, and then you get a sharper bull market, and then this crash pulls down and you get a sharper bull market. So we have 3 different bull market lines that get increasingly steeper as you get closer to the bubble. And now we're just breaking through those trend lines and setting up a bear market. So that's what this blow off top is all about. And yeah, Ron Paul said 50% or whatever. So, I mean, 50% would be somewhere around here. But in a longer term bear market, I mean, who knows? We could see over a couple years a target that's lower. I mean, there's a huge range of where a bear market could land. I don't know. I mean, that kind of a little bit more than 50% estimate's not particularly useful. That's why we're getting in here and just looking at the patterns and trying to figure out the movements so that we can not exactly target price points where we're reversing, but target trading activity that indicates switches in the market, and try to time them and pay attention to the trading activity. So that's the update from the libertarian bubble front, which I'm not exactly a libertarian. You'll see on my channel that I talk about Keynesian and Austrian economics and MMT pretty evenly as concepts that all apply to what is going on. And I have, like a playlist that does a bunch of monetary education. If you want to watch videos like that are less technical and graphy, just on general monetary education, I have channels for that also. This is a higher level video looking at the stock market graph, but I'm going to be doing a lot of daily moves that are that are zoomed in on the timeline where you can actually see what's going on, not this mess right here. So, please hit the like button. This is not investment or political advice, and happy trading.